What's up, everybody, and welcome back to the Traders Mind Chat live show. Today, we are talking stock market analysis, global macroeconomic news, trend analysis, sector leaders, going through all that. Before we dive in, as always, if you would please like and subscribe to the show, that's going to help boost the channel, help get this out to more people. Really appreciate that. And drop a comment. Let me know where you are watching this from. We're broadcasting to a bunch of different spots. But now, let's get into global macroeconomic news, headlines, news, and how it's impacting the market. And I want to share with you a study that I just literally started doing earlier this week. So we have the major spots that we've been tracking, right? So headlines from IBD, headlines from MarketWatch, headlines from Benzinga Pro. The people over at Benzinga Pro were kind enough to gift me with a subscription to this, so I'm checking it out. Looks like a lot of stuff going on in there, but some of the apparently the news items that are highlighted are the ones that are supposed to be important. This looks like it's from ages ago. I'm still figuring out Benzinga Pro, but anyway, we'll get into that. The study that I'm doing is tracking the major headlines of the day versus what the indexes are actually doing. So like I started to plot this out just the other day, and I thought that it would be interesting to start to see how the market moves relative to whatever the headline happens to be of the day. It's something that I discovered like years ago, right? So my process now has been like kind of the same and evolving in a similar way, going down this path for more than 10 years. And the thing about this stuff is here, like I'm looking at the screen instead of looking at you guys. But the thing about this is that you you start to realize that, you know, well, what matters more is not what's being said by the media. What matters more is what the actions that are actually happening. And what I notice in my own trading too is that the headlines don't really matter so much. And I can actually do better without knowing what the headlines are. Like if there's some kind of a major event happening, okay, like that kind of context is good to know, but far better is to know what's actually happening. So that's where the idea for this study started to come from. So all that said, let's just take a look at what some of the headlines are today. Like, so here's IBD. IBD says that stocks fall on mixed Ukraine signals. Retail rates climb. Okay, great. Then we've got MarketWatch. MarketWatch not even mentioning that at all, going a different way. So maybe Ukraine and Russia are becoming a little bit less weighty on the market, at least through their lens. As investors punish Shopify, these 15 e-commerce stocks are expected to grow sales and most through 2023. Interesting for Benzinga, right? So they highlighted this as the most important thing affecting the SPY, right? Like, so from the top to where they're like tracking all different news items on this side over here. So the most important thing, oh, well, look at this. FOMC minutes for today, or for January 25, 26. And then earlier today, the U.S. retail sales month over month, 3.8% versus 2.0%. And see how that affected the market. And it's part of the thing that's interesting too. Like you could look at one headline and the market moves one way. You look at another headline, the market moves the other way. And rather than trying to guess which way the market's going to move based on what you think, just observe what it is, and at least like that. That's what's made the most sense to me over time. Let me know what you guys think about that. Type into the chat. Let me know. Come back over here. And so we've got the major headlines, and here's what the major headlines were uh, for the last couple of days here too. Right, so we could make this bigger. That way you guys could read it on your end. This is going back to, actually, you know what? Rather than doing that, why don't I just click into this thing and you're probably able to read it a little bit better that way. So on, yeah, well, when the market dropped on well, what is that? The 14th. That's Monday. IBD said market mixed as Russia-Ukraine tensions rise. Market Watch also said what a Russian invasion Ukraine would mean for the markets. Then Benzinga Pro, traders circulate reports of satellite images showing Russian troops leaving the assembly points. Right, all that as the market's dropping. Then the next day, stock market gains as tensions on Ukraine's ease as travel gets a boost. So that's interesting, right? So on Wednesday, Benzinga Pro is saying that traders circulate reports of satellite images showing Russian troops leaving the assembly and the market's dropping. Then IBD reports it a day later and the market eases up a little bit. That's kind of interesting, isn't it? And I have it plotted over here on the IBD 50 rather than putting it like having more noise over here on the uh, my markups of the S&P 500 and the Nasdaq and blah blah blah. Um, what do you guys think so far? How do you feel about the way that the market moves, like relative to the the prevailing headlines of the day? Here's what it was saying from yesterday. Right? Benzinga Pro 2. Putin says, we do not want war in Europe, says decision on partial withdrawal of troops has been taken. So whether we're out of the woods yet or not, who knows? As far as Russia Ukraine goes and how it's affecting the market, but one source says that the troops are backing out. The other one says that it's backing out like a day later. And this is kind of like where you're at. So why not read the price action? So let's get into reading the price action. And here's how we read the price action. The top, start with the monthlies and then work your way down. Start zoomed out and work your way down. The reason why, so that way it's kind of like you're an eagle, right? Like you're an eagle flying above the all the minutia. You're able to see the forest. You're able to see the trees. You're able to see the leaves, and there down in the ground is your little feed mouse. That's the trades that we're going to be interested in. So up here, what do you see? You see mostly sideways trends to starting to see the monthly charts start to roll over a bit, right? Is the screen clear on your end? Let me know. So I'm looking at it on mine. On mine, it's clear as day. Then I'm looking over here at StreamYard, and it seems like it might be a little fuzzy. So why don't I zoom in a bit just to make sure? Yeah, make sure you type it into the chat too. I can't see you guys. I don't know if you're uh, able to see it well or not, or if you're falling asleep, or let me know. Caleb says green is clear. Caleb, you're the best. You're like the ambassador of these live streams. I'm telling you. Um, so yeah, so S&P still moving sideways. Nasdaq starting to begin a downtrend. Russell in a downtrend. NYSE and Dow sideways for now on the monthlies. Weeklies, right? Weeklies are in downtrends. Like it started to catch a little bit of support. The Russell, arguably sideways trading below its 10-week line. But if you notice, like all of them are below their 10-week lines and are struggling around that general area. Other thing too, right? Like well, when you're in a strong bull market, like are you going to see stocks that like your major, not that Shopify's a leader anymore, but like former leader, right? Like breaking down hard like this. Or maybe you see your, let's take a look at Microsoft, right? Downtrend, Amazon, like just chopping sideways. Like that. This is true indicative of what the market is doing right now. And a question that uh, tends to come up, is like, well, when should I get in? Right? Like, I don't want to miss out. Like, if we're near the bottom and if we're turning around, like, shouldn't it? Isn't it time to buy? Well, not necessarily, right? Just because it's you're at a bottom, does that mean that it's time to buy? Well, it not necessarily. That the reason why is because if you are trying to cherry pick a bottom, right? Now, let's say that you do buy the bottom, right? Like let's say that you come over uh, to Amazon and you bought this low right here, and let's say that that low at 2,700 ends up being the low before Amazon eventually makes its move. Well, the problem is that Amazon is still in a short-term downtrend, right? Over here, you're trading below your 40-week line, you're trading below your 10-week line. And even if that ends up being the low, who's to say that you don't just move sideways here for another year or two, right? Or longer? You have no idea. Well, all we know is where price is at right now, and even if you don't like end up losing on it, like if you're only making, right, like let's say over here, like you're up 15%. Okay, well, like that sounds pretty good, in the short term. But if that's the most that you end up going, like 15, 20%, and it takes you months, years, and that's where it goes, like that's not great, right? And you're also chopping around in that area. Like it's better to be in the growth phase where you're over here and you start to break out, right? Like let's say you get in over here as Amazon's starting to break out above its prior highs and it finally makes the turn. And then in a couple of months, you're up over here and you're up 37%. Where let's say you're over here, let's say you're in this run, you're up 30% in a month, and then you get caught in this bar and you see the reversal and you freak out and you sell there. Well, even there, you made 17%, right? But it took you 5 weeks to do that. Versus if you cherry pick the bottom and you're just bouncing around for God knows how long, right? Like it's better to be making money quickly, and then you're in a position where you can start to compound that money, right? Like so you make the gain, you take it out, you roll it into something else, and that's how you're able to compound and compound quicker. At least that's the kind of strategy that I follow. And not that my strategy is perfect or the best for you per se, but um it's something that A works, and B like it allows you to compound that much quicker. At the end of the day, I think that we need to trade in a way that makes sense to us and um, fits up like what our goals are. I'm way off topic, aren't I? Trend analysis for the S&P, Dow, and for the major indexes. Back to the stuff. Okay, throw Amazon on another screen. Let's get back to this. All right, so we've got our major indexes. We're zoomed in on them. We've got the IBD 50 down there. And yeah, well, all of them are in intermediate term downtrends or sideways but negative at best, right? Like they're all below their 10-week lines, they're all below their 40-week lines, they're all kind of choppy, right? They're all giving that those little rallies of hope, right? Like the market starts to turn around. Maybe it's bottoming, maybe it's not. It's up 2% one day, then it's down, marginally the next over here. Like take a look at this. Take a look at the Russell, right? The Russell has been kind of wedging its way up over here. Kind of violated that trend line, but if we start from here, it's held that area, wedging its way higher, finding some kind of resistance around here. We'll see what happens, but in general, if we're looking at this and you're in a decline, that's a bearish wedge. Although the moving averages are starting to turn up, and that like see that this is where this is why this area here can be very dangerous, and it can be very dangerous to try to pick a bottom. And the reason why is because over here you could be getting in early, right? Like let's say the Russell starts to turn and you're getting in early right here. Maybe you set a stop over there, great. But this pattern in itself, right? Like you're forming like a triangle or bearish pennant, and you could start a short position on a break below here with a stop somewhere in between this level around 2078 and around 2100, somewhere in this zone. It's a chop zone. Some of the price action on the major indices is almost starting to tighten up a little bit. Right? Like it seems a little less volatile than it's been, or maybe that's just wishful thinking. Yeah, I think that it kind of is. It almost seems like it's still within character, right? Like it's slightly less volatile in this zone here than back here. But if you compare this to over here and these down days compared to what's over here, it's still noisy as hell and pretty darn volatile. Something else too with these down days, right? If we're taking a look at them day by day by day, you notice how the downtrend starts back here, right? Like so, it's almost sometimes it's good to look at this stuff and treat it like a storybook, right? And so go day by day and let the market tell you the story, right? So down here, down day, volume slightly elevated, not really that much, but this is the first time in about a week, or like back here really you start to see this volatility pick up, like over here in this area. It starts to level out, and then bam, the volatility is picking up again. Great, so we'll start from here. Volatility picks up, you're closing below all your major moving averages. Then over here, you're rallying off the S&P, off the 50-day moving average. Tight day overall. Then you're below the 50. Then you drop all the way down to the 100. You rally. You close at the high, close to the high, but underneath the 50. and volume is elevated. So you're caught between areas of support and resistance at that point. And resistance is also mounting. Why? Why do you think resistance is mounting on this day? And you know what? Why don't we do something fun here? Why don't we do this little replay function and we could start to see the story play out that way. Right? So taking a look at this, well, what do you see here? You go, well, what might give the S&P some trouble on that day, right? Like so price reversed off that orange line, off the 100 EMA, closed near its high, but well, why might it have some trouble? Like what might give this some headwinds? Any guesses? Any thoughts here? Yeah, I see a bunch of people in the live chat. So far, Caleb's the one person to drop comments, so I can pick on Caleb. Yeah, if you're still there, you tell me. Well, what kind of headwinds does it have? Or somebody else. If somebody else beats Caleb to the punch, then maybe we've got some more prizes to give out. Well, we'll see. Gonna have to beat me to the punch. Let's see. Getting back above the EMA. That's one. That's yeah. You have how many here? You have oh, so you need to get above back above the 50, right? So Caleb's right. Caleb no was a part of the elite program too. We were talking about it a bit yesterday, so he knows some of the things that I tend to look for, and things that can cause headwinds. But over here, right? So you're in a downtrend, right? So now you short-term downtrend. The S&P has to fight its way back above in order to get back above, right? Like so, yeah. Now I see like Caleb typing way fast and furious. Keep going, man. You're doing great. Yeah, you've got the 50-day, you've got the 5 EMA, you've got the 21, and you have the 10, and you're fighting all of them. Right? You have to get back above all of them to re-establish yourself as starting to transition from downtrend to sideways to back to uptrend. And not only that, these short-term moving averages are curving down, right? So that's showing you that the momentum is to the downside. Next day, the fight is on, right? And it starts to come back. Volume is a bit higher. Okay. You still have some decent volatility. Buyers stepped up and they're having a little bit of an argument there. Next day, price does follow through, closes in the middle of the range, right? And less volatile, but volume is heavy. So somebody else, right? Like so, yeah, you know what? Like, yeah, screw it. Like everybody, like type in. Let me know when volume is elevated and you see the price bar not have that large of a range, right? Like that's a fairly tight range, and it closes in the middle of the range. Well, what would you consider that to be? Right? It has a specific name. It's a type of what? Begins with an S. All right. What is this? Could be interpreted as a stalling day, right? Like almost like you're stuck in the mud, right? Your wheels are turning, but you're not going too far, right? Like you you have some decent volume there. You're closing in the middle of your range. Like there's a war going on between buyers and sellers on that day. And short term, the buyers lose, the sellers start to win, and you push price lower, and it's getting more volatile, right? So, a tight day, right? Like, this is how context matters, right? So many people will look at just one bar and they're just getting sucked into the minutia, and I'm guilty of this too, right? Like part of the way that I know that this is what people do because like I've been guilty of all this stuff myself, and it's in going back to the basics that I keep on trying to like make a point uh to mention every time that we're doing this, is to start with the charts like reset, start from the top, start from being zoomed out and then going one by one by one, so that way you're getting the full picture and not just getting caught into, okay, like, oh, the market just sold off here and where it's a doomsday scenario. No, right? We want to take into account all that stuff, take into account everything, right? So just because price sold off that day doesn't mean that we're in for a collapse, right? Because remember back here, price rallied off the 100. Then what? Price fell, but then reversed. And yeah, like there's some buyers in this area and price is closing in the high of its range. So when we get that, like this happening, that you're in that perpetual tug of war, like who's going to win. Let's fast forward just a little bit, right, for the sake of time here. How far are we back? This is the middle of January, so let's, right, there's a sell-off, we're rallying, right? So is this the bottom, right? So price fell hard, probably shook out a bunch of people. We were down below the September lows there. Buyers stepped in, and it's been whipsaw since, right? You're tightening up a bit over here, right? But again, context, right? Context matters. So over here, price starts to rally, right? You have the rally, you break out, volume is like half of what it was from down here, right? So is that a strong rally day or a weak rally day? On the weaker side, right? Like what happened to your buying volume? You do start to follow through, and then you have all this overhead supply, right? Like because there's people that were getting long up here, there's people that were freaked out down here that are trying to figure out like, do I want to exit positions? Do I want to hold? What do I want to do? They're struggling in here. And when you're getting these elevated volume days like this right here, here's another stalling day, right? You're caught between support and resistance. You close right in the smack in the middle and you're bouncing off the 200-day moving average. You're caught between long-term support and intermediate term resistance on that day. That's how you could start to read some of this, like you're reading sheet music or you're reading a book. Price rallies, right? And so just because you're finding some resistance and you're finding some sellers, it doesn't mean that price can't reverse. And so that's it. That's another great point. So many people want to get locked into a narrative, right? Like getting locked into something like this, like, oh, stocks fall on Ukraine signals, or something completely unrelated, right? Like all these kind of things. Oh, well, what's the FOMC saying? Or, well, what's the retail sales doing? Oh my God, these things are so important. Well, there's how many variables are coming into the market, right? Like how many are we going to be able to process? So watch what the masses are actually doing. Unless if you're somebody that's here, that's watching this, that's running like $1 billion fund, you're not going to be moving the market. So it pays to just sit and watch and see like what's happening here on this day, right? Pretty nasty day, right? Like sellers are in control on this day for sure. Volume is way up about to what it was on the day that you had that big that capitulation day. You're closing at the lows, but above long-term support at the 200. You advance again, and now you're breaking that support level. Volume is still elevated. Let me know if you guys have questions, by the way, too. Always want to take questions as we're doing this. I want to make sure that you guys are following along. And then over here, right? Like some selling starts to alleviate, but it's still pretty heavy, right? Like, so if we're trying to look at this as, oh, like that's a reversal, well, volume got a little bit lighter, and you're in a massive tug of war. But what else is happening? You have these shorter term moving averages curving down harder and breaking below the long term 200-day moving average. So it's showing you again that uh, the trend is worsening to the downside. And that's kind of where we're at right now, right? So price rallied back, it's lighter, and we are right at the 200-day moving average. So who knows what's going to come tomorrow or the day after or the day after that? But well, what's going to dictate our choices, how we're going to trade this? Are we going to try to pick a bottom, right? Like maybe this is the bottom, but who knows how long we're going to be moving sideways for? Say that was the point where with Amazon. Let's say that you're this guy back here that you bought Amazon at 2,871. You're like, hell yeah, boy, I got the bottom, right? And then hey, you see a rally of 20%. Yeah, and the man, I'm gonna hold this forever. And then like, you're how many months in, right? So 4, 8, 12, 16. So you're 4 months in, and you're like, all right, yeah, I still got my 20% from back here. Then you go a bit further. Oh shit, I almost gave back the whole thing, but I'm glad I held, right? So so you're there, you're 23 weeks in. And then you come all the way over here and you're like, yeah, we're breaking out the highs. I'm up 30%. I've been holding this now for a year, right? Here's a year mark. The year, and you're up 18% if you bought the low from September of 2020. And then you're back up and you're breaking out. All that's amazing. And then over here, you're actually underwater. Right? You're down 6.5%, and you've been holding for 70 weeks. Right? You holding for 70 weeks, and you have less money than what you started. Yeah, like this is why that like you want to that like I just find it so much better to buy stocks that are already in an uptrend versus um, moving sideways like this. And by in an uptrend, I don't mean like just buying stocks that are extended. What I mean is uh, finding stocks that are in an uptrend, then they consolidate, and then they break out, right? So that way I can exit quickly if I'm wrong. So let's say I bought Amazon here. Let's get rid of some of these drawings. Let's say, just for argument's sake, I saw this cup with handle. Let's go, and I buy, right? And let's say that I bought and I didn't have much of an exit strategy other than I'm going to maybe take a 20% gain, right? Like did it how far did it go? It went 7%. Great. So let's say I'll take a 20% gain, but I'll cut my loss down here, right below the low of the handle. So in that case, I am sitting with a 5% loss or a 4% loss after a month. Okay. And I feel like the opportunity cost of sitting back here for a year and you held on through that and now you're up a smidge and you're just somebody that like I'm never going to sell this. You're up 10%. in a year and a half. Like you could play the long game, but like if you're trying to pick a bottom, like it's just not worth it. Like wait for the turn to actually happen, get a consolidation, and then go. Let's talk about some of the leading sectors, leading industry groups, and other leading stocks. Not a whole lot, but um, some of what was setting up yesterday, and I will bring up MarketSmith. MarketSmith is a tool that I use for all of my screening. Here's some of the stocks that I was paying attention to yesterday, and or that were seem to be setting up yesterday, heading into today. And I noticed that there was a couple of energy, but more so getting back into banks and real estate. Some of these setups are like marginal setups, right? Like CHH, like kind of marginal. It didn't break out. CUBI, marginal. Like I'd give that a 4 out. Like this is getting closer to breaking out. Um, Similar with FFWM. HWC. HWC actually triggered an entry for me earlier today. It looks like it's moved up off the lows. That's nice. Like, kind of sucks when you get an entry and then it squats immediately. You know, it comes with the territory, but good to see it rallying towards the end of the day here. CWK was also high on the list. Didn't buy it, but it's well, when you start to see things on the list working, it's good because even if you aren't buying the one that worked, right? And so this is something else too, where I used to be the guy that would kick myself if like I have a stock on my list, or let's say that I have a dozen stocks on my list, and I buy the one that doesn't move, and the other ones on the list that are there, like those are the ones that go. It's just like, oh god damn, like I'm such an idiot. Like why didn't I buy XYZ, right? Who here has told that to themselves? Like I've got both hands up, right? And it's actually great information. Number one, like you picking like if you think of your basket of trades as like a bag of marbles, right? Like this is something that the Van Tharp. If you guys don't know who Van Tharp is, excellent trading coach. He's put together like an entire institute, wrote several books. Some of my personal favorites, Super Trader is one. Trading Beyond the Matrix. It's a great psychology book. Uh, the Definitive Guide to Position Sizing. It's a textbook. I actually have it. Hold on one second. Let me grab it out of. I think it's in. Yeah, right here. Fantastic book. Definitive Guide to Position Sizing. Textbook. Written all that. Anyway, so where was I going with this? Um Lost my train of thought, but anyhow, yeah, so well with what Van Tharp was hold on, let me look at some of the comments here too. Yeah, Caleb said that he's read Super Trader, has it. I've literally bought the wrong one in the watch list all the time. Yes, thank you, Scott. Yeah, now I'm back on track. So buying the wrong thing in the watch list. So Van Tharp's Van Tharp's example was like you have like a bag of marbles, right? So let's say that you've got a bag like this, it's filled with marbles, and you pull your hand in. Wish I had some marbles. That would make this example really good. So you have your bag of marbles, you pull one out, and you don't know what color marble you're going to pick out, but you pull one out, right? Like that's basically what your trade ideas list are, right? Like you don't know which one is going to be the winner. You don't know which one's going to be the loser. You could attempt to increase your probability based on technical analysis and reward to risk and looking at all these other factors. So we've got a better chance than just closing our eyes and sticking our hand in the bag and hoping for the best. But we still don't know, right? Like unless if you have the time machine or the magic crystal ball. If you do, let me know. Let's talk. But we don't know well which one is going to be the winner. But if we do see a stock that's on our list and we start to see other stocks on our list moving in the right direction, then that at least lets us know, hey, you know what? In this bag here, in this bag, well, we've got a bunch of winners, right? It's great information. It's also great information if we take a look at these stocks and they're all going to hell in a handbasket. Then it's like, oh, you know what? Well, we've got a bag of losers here. Let's not trade that much, right? Like solid information, right? That's why it's so good to keep track of your trade ideas. That's why I keep track of my list and continue to share it with the team, well, with our members. Right, so that's why, like over here, like well, we keep track of the focus list, like every day, like I'm keeping track of the trade ideas. Right, let me refresh this. Like right now on the week, 9 trade ideas are in the green out of, yeah, how many total? 9 out of 18, so half. Right, like so yesterday and the day before, only 11%. That sucks. Right, like not a great type of market to be trading in. As conditions improve, then it's like, oh, you know what? Like, let's test things out. But it's also why, too, we don't want to just look at, well, what's the trade ideas? We always want to take everything in context, right? And it's not meant to be super complex. Like there's really the you could really boil it down to 3 things that want for the trading equation, right? We're looking at the market's health, right? The overall health of the market. And we break that down. We spoke about several things already today that break into the market's health, or how I like to think of it, the market's mood. Then you have the trade grade, right? Like the individual trade that you're going to take, right? So and there's different components to that. So market mood or market health, trade grade, and you take those 2 things, and then from those 2 things, you can figure out, well, how much risk should I put on? How big should my bet be? Right? Like, should I be trading large? Should I be trading small? Never all in, never just a little pittance, right? Because you're never going to make any progress that way. But like, should I be risking 1% of my capital? Should I be risking 1.5%, 2%? Right? Like probably not more than 2% of capital, where if you lose on the trade, you're losing 2%. But should you be risking 0.5%? Should you be risking 0.25%? All that stuff that we just discussed helps us figure out that equation, and it really does boil into those 3 things: the market condition, the trade that we're going to take, and how much we're going to put on. 3 simple things. Let's take a look at some of the questions. Let's do the open Q&A here. I've got my water bottle in the way, blocking the time. Oh, wow, we're already at about 45 minutes in. Let's see. Got a lot of comments in here. Scrolling back through. Let's see. Here's one from Scott. What are your thoughts on running a mechanical trend following trading system? Yeah, I'm all for it. Like so, whatever kind of system that you have, you want to test it, right? So, um, none of us need to start from scratch. Right? Like there's plenty of people that have built successful systems over the years. Yeah, you could model what I'm doing. You could model what any other number of people that you find that you like, know, and trust, that you've seen results from. Like, you could model after them. Uh, the thing with modeling success is that you are like you're not like you're going to start out by trying to treat it like a recipe, right? Like that's how we all do it. But for our own taste, we're going to want to pepper the sauce in our own way, right? Like, if that makes sense. So you'll find something that works. So with this mechanical system, if you got it from somebody else that's verified, where you've seen results, then fantastic. Then you can start to mold it in your own way. See, how many results does this system give, right? Like, how many trades does it give in a year, in a quarter, per month? How many times am I executing this thing? What are the results? Of course, that's something that we'd want to, that not just the annual return or the annual expected return of this thing, but what's the potential drawdown of this system? Does it work? How does it work in different market types? Right, like, because the market type that we're in now, we're in a bear market. How well does this thing perform in a bear market versus a bull market? And some people might say, well, we haven't fallen, 20% on the Nasdaq yet. Well, we fell 19%. I think that you're kind of splitting hairs, if that's the idea. And on the Russell's fallen more than 20%. So I think that there's a bear market there. And taking a look at like your Facebooks of the world, and your like Amazon's trending like a bear market. Uh, let's see. Other questions here. Just saw something else pop up from Scott. I know that Van Tharp is a big fan of systems, and has an interview with Tom Basso within his book "Trade Your Way to Financial Freedom." Yet Tom Basso, so like, he's somebody too that I've admired from afar, but I haven't quite gotten into so much of his stuff. But the phenomenal trader, right? Like, so, like, anybody that's been profiled in Market Wizards, of like, there's if ever that verification right there. So you could model right after him, but do you necessarily need to trade mechanically? Like, there's some people that prefer mechanical systems. There's some people that prefer a discretionary rules based. That's kind of the camp that I fall into, right? Like, so by following guys like O'Neill, and following guys like Minervini, and like, just that whole can slim ecosystem, right? Kind of like been brought through that with the IBD, and doing the IBD meetups for so many years. It's rules based, but there's discretion, right? Like, you decide like what trades you're going to take. You model it uh, based on yourself, and you have your observations too. That's not to mean that it's like foo-foo, like you're looking into a crystal ball, or getting mystical, or anything weird like that. But like, you look at data, right? Like, looking at the data uh, that we've talked about this entire live stream, and you'll be able to make inferences from that. You'll be able to bounce these ideas off of other people that are similar, right? Like, that's why it's one of the reasons why trading with a group can be a powerful thing, and not just like random people, like in some like giant free thing, right? Like, I love stock twits, but if we're just to use them as an example, like going into like uh, just like a random stream, like, right? Like, so let's say that we wanted to talk about Facebook, and so, and you're interested in trading Facebook. Let's say, I don't know why I'm on Facebook, but that's the example. So you're there, you're looking at that ticker, and you're seeing like all different kinds of random thoughts on it. Like, that's the thing that's going to be as confusing as hell. But if you're with a group that thinks similarly to you, and you have other people in there that you could bounce ideas off of, it's an objective thing, then that's when you could start to make some real progress. Like, that's the thing that ended up working for me when I joined the IBD meetup. and started to work with those and became a leader there. Like we were all talking the same language. So yeah, if you're down for a mechanical system, and you're basing it off of Tom Basso, like I'm pretty sure Tom, I don't know if he still has, but I believe he did have a Facebook group. You might want to check that out. Um, Especially if you're basing a mechanical system off of that, like you'll likely be able to either talk to him directly or other people in that group, just get ideas. And another thing too, people that tend to be very, or at least from my experience, people that are a little bit too headstrong or set in their ways are trying to say that the market will do X, right? Like whenever I hear "will do," like I kind of cringe. Right, like who the hell knows what the market will do or won't do? Like we see what's happening and we adjust. Let's see. Scott, love these videos. Thanks for your interaction. Oh, appreciate it, man. Most people don't do this for the public, and it speaks volumes about you and your company. I really appreciate that, man. Like it's comments like this uh, that inspire me and help me to keep going with this. Like I'm not sure if you saw the live stream yesterday too, but I'll mention it again here as well. As far as these live streams go out, like I'm dialing it back a little bit. I'm going to be doing one to two per week. I'm working on a new book, and I want to have the draft of the book done by the end of April and sending it off to the publisher. I'm working with Wiley. Wiley just published my friend Adam Sarhan's book. Is it up there? I think have it in the closet. Anyway, definitely check out Adam Sarhan's book on psychological analysis. I thought it was fantastic. Um, well, what was I saying? Yeah, so fewer live streams. I'm going to continue to do these 1 to 2 week. Seems a lot like you guys really like the live trading. Let me know what you think about the live trading. What you think about this one here. If you're just happy to hop on and be a part of something, right? Doing the interviews. I think that the interviews are fantastic. I learn a lot like that. That's part of my personal development, having these interviews. So next week, well, we're going to have Leif Sereda on the show. He won the U.S. Investing Championship in 2019. He's coming on the live stream next week, I believe, Tuesday, the 22nd, whatever day the 22nd is. I need to get the promotional stuff going for that. But yeah, so cool stuff like that. Let me know what you're interested in. Definitely want to keep that stuff going, and give as much value as I can on these live streams, especially since we're moving from 3 down to 1 to 2 per week. For the elite program though, like I'm still doing. So if you want to get more of me, and Julio, I will get to your question. Since I'm on another tangent, I wanted to take the comment off. But if you do want to have more interaction with me, that's what the elite program is all about. Like we're doing 3 hours on Discord, and all the microphones are open. Where we're doing this mastermind every Saturday morning, 10 a.m. to 1 p.m. Eastern. We're doing an Ask Us Anything. Well, actually, our next Ask Us Anything is today, 4 p.m. Eastern, right after the close. We're on Discord again for about an hour, a little bit longer than an hour generally. Again, all the microphones are open. We're interacting directly. And we're doing that stuff every week, and we archive it, and yeah, like constantly like interacting in the Discord chats too. Myself, our other coach Stu, who is freaking phenomenal. I've learned a lot from that guy in the year plus that he's been coaching with us. And yeah, so definitely check out the Mara Elite program. Let's see. On to Julio's question. Mike, how do you usually scale out of a position? Do you take profits faster in a choppy downtrend market? Generally, yeah. Generally, yeah. So I like to give myself 4 ways to exit a trade, right? So I kind of see it like if you've ever seen my Instagram, this might be a good time to put this on. Right. So if you've ever seen my Instagram or follow me on any of those things scrolling down at the bottom of the screen. But I have this cartoon that I posted about how trading is like going to a movie theater, right? Like you go, you execute the trade, and now you're there for the movie, and you don't know if the movie is going to be phenomenal or if it's going to suck, right? So sit at the back of the theater, and you have four different exits in the movie theater, right? It's important to have multiple fire exits in case there's a fire, you want to get the hell out of there, or if the movie sucks, you want to get the hell out of there. So that's your stop loss, right? Right behind you. But if you also have the three other exits, right? So you have your profit targets. That's ideal. That's where we want to go. But if something happens and we need to exit early, then we have our trailing stops. Personally, I like to use the moving averages, so the 21-day exponential moving average, the 10-day exponential moving average, sometimes the 5 day exponential moving average, if it's in a really strong trend in a choppy market like this, yeah, it's less so. And then there's a backstop where if price is consolidating, then price should not fall below the consolidation level. So that's another type of place where I'll exit. Um, that's it in a nutshell. I've I have a bunch of educational videos. They're all archived on merrillwealth.com. They're part of the elite program. So yeah, come check it out. Everybody gets full access to everything in the elite program, including the spreadsheet too, which like you not only get to view this, but you get to download it and can treat it as your own personal uh, trading journal. Let's see, here's some more questions. Lee, welcome. Bear market, screw 'em. Yes, indeed. Thursdays are awesome. Appreciate it, man. We'll see if we could do more of these on Thursdays. I'm not sure which days. It'll be like whatever works out to be convenient. So, again, we'll be doing 1 to 2 per week. And Yeah, well, it'll either be a Tuesday, a Wednesday, or a Thursday. So make sure that you're subscribed to the channels, and then you'll see it pop up. And also, if you're not on the newsletter, get on the newsletter. You can click the link in my bio or down below in the description. If you're watching this on YouTube or watching this later on, like on Spotify or wherever we're broadcasting this stuff to, get onto the newsletter so that way you can get these alerts. Like we'll send them out to you, and you'll be able to hop on live with us. It's always at 2 o'clock, unless if we say otherwise. But Scott, what are your thoughts about strictly employing trailing stops versus taking or cutting profits? I like to do both, right? Like it. So to use the movie theater analogy again, right? Like, so what if we only had like one exit in the movie theater, right? And there's a fire. We're going to have a problem whether it's the exit right behind us and that's the only one, whether the exit is in front of us and that's the only one, right? Like that's why movie theaters have like multiple fire exits, right? Like there's 3 or 4 fire exits in a movie theater. Any of you firefighters are familiar with that kind of stuff? Like if you are, like type in, let me know how many there are. But I know that there's at least 3. Like I've always seen at least 3 in every movie theater that I've been. But um, yeah, don't limit yourself. Use more of them if you're just starting out and you're trying to figure, well, how do I do this or that? Like start to like you could use both, but study both of them, like how to do it, and that's part of the um maybe we could do another live stream on that where we could go deeper. We're already at the hour mark. I'm gonna have to hop off here uh pretty soon, but yeah, you there's different ways to use the trailing stops. Uh, like the just to give you something. Like the way that I would be using a trailing stop, like if I'm starting out in a trade, like I want to see like which one has been respected, right? Like so let's say I was starting this is such a bad example. Let's go with uh rows back here, right? So start of the position back here, it was getting support on the 21 EMA. I sold some into strength over here, about half into strength, let the rest ride, and it was starting to get support like around the 10, undercut the 21, and so that's part of my trailing stop, and also below structure back here and below the my break even point, and so I was out of the rest. So in that case, it's like it just ran for all the exits, right? So sometimes that happens in a trade as well. But try to find which, if you are using moving averages, which one is dominant. Try not to use too many different things, right? Because sometimes some things will work, sometimes something else might be like, oh, like I should have done, like I should have used the 5 EMA, or I should have used an anchored VWAP, or I should have used something else, right? Like there's always going to be something that could have gotten you out a little bit better in this scenario, right? Or that scenario. Like if you flip flop too much or you have too much shit on the screen, then it's not going to be good for you. Simple is better. All right, Scott. So, yeah, hopefully that was helpful. And I've got to cut out too. So, hopefully everybody else feels the same way. Hopefully that you're finding value in this. Drop comments down below. Let me know the types of topics that you like to hear. Let me know who you might be interested in seeing an interview with on the channel. I'll try to make that happen again next week. We're having Leif Sereda on the show, U.S. investing champion from 2019. And that's it, everybody. Want to say thank you so much for tuning in, and I'll see you back here again next time. Take care. Much love. Peace out.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.